Hey everyone, Plug reported first quarter earnings results that disappointed investors. The stock was down 14% after the announcement, but fluctuations of this kind are not rare for Plug Power stock and should not be seen as alarming or should not be a signal for investors to stay away from Plug stock. This is usual for an innovative growth stock with massive potential but wild fluctuations in the short term. So in this video, what I'm going to do is review Plug's latest quarterly results and kind of illuminate and answer a little bit on what's going on with Plug stock. So revenue in the quarter increased by 49% to 210 million, but the net loss worsened to 207.8 million. That was up from a loss of 156.9 million in the same quarter the prior year. As you could see, the net loss was almost as much as the revenue. So it's losing almost as much money as it's generating in revenue. Plug's liquid green hydrogen plant in Georgia will complete commissioning and ramp production throughout the second quarter. Plug said that it continues to see strong demand from EV fleet owners. Plug stationary power units will deploy in the second quarter as well. So some big catalysts for Plug and Plug stock in the second quarter. Plug is also evaluating non-dilutive sources of financing to fund growth initiatives. What does that mean in simpler terms? Well, it means that Plug saying that it needs more money because it's losing so much money on the bottom line, but it's going to try to do that without diluting existing shareholders. So that means it's going to try to borrow the money or raise the money through partnerships rather than to sell more equity, which dilutes shareholders, right? So that could be seen as good or bad news. It could be good news if the company can get these sources of financing at low cost and does not need to sell more stock to raise those shares. But if non-dilutive sources of financing means that it has to pay much higher interest rates to borrow the money instead of just selling more stock, then that could be seen as bad news. It all depends on how cost effective it can be in raising money for its growth investments. Now, why is Plug spending so much money trying to grow so quickly? And it's because it sees a massive market opportunity ahead and it wants to be the one to capture it. Plug is forecasting a $10 trillion total addressable market by the year 2050. So that's a long term goal, and Plug is investing right now to try and capitalize on that market opportunity. It wants to be ready when the market has matured for liquid hydrogen and green hydrogen energy, and it wants to be the primary player in that market. So for that reason, it's spending money on research and development, spending money on increasing capacity, output capacity, and spending money on reaching deals to try and be that player at the forefront to capitalize on that massive market. Still, cash flow from operations, the outflow, how much cash it went through in the quarter, increased to 277 million. That was up from 210 million in the same quarter the prior year. So it went through more cash in this year's first quarter than it did in last year's first quarter. Now, investors have been waiting for some economies in scale here. At what point does Plug complete all of these growth investments and it starts to show economies in scale, meaning like when revenue increases, it loses less money on the bottom line and it burns through less cash and it actually adds cash to the company? That remains to be seen when that happens, but management did note that it expects its profit margins to improve throughout the rest of this year. So that was a positive sign to Plug investors who are looking for some kind of improvement in profit margins and profitability. The company does have over $1.6 billion in cash, so its need to raise money is not urgent as of now. At the pace it lost money in the most recent quarter, it could go on for about 5 more quarters before it reaches the level of danger where it's going to run out of cash. So that's all I've got for this video. I hope that highlighted what's going on with Plug stock, an innovative growth stock with a long runway ahead and a fluctuating stock price that often goes up and down by double digits. And we saw that in the aftermath of this quarterly earnings results where the stock price was down by double digits. All right, thank you so much for watching. I hope I'll see you again soon. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.